Welcome back, everyone. The Senate just delivered the biggest crypto regulatory breakthrough in months, and Bitcoin reacted immediately. From a midweek low near 75,500, Bitcoin surged back above 78,000 by Saturday morning. The S&P 500 hit an all-time high, its fifth straight weekly gain. What happened? After months of intense negotiations between crypto firms and bank lobbyists, the Senate reached a historic compromise on the Clarity Act. The bank lobby wanted to ban all crypto rewards. They lost, crypto won. Today, I'm going to break down exactly what the Clarity Act does, why this is a major win for Coinbase and every crypto user, how Bitcoin bounced, and what comes next. Let's get into it. First, let me explain what the Clarity Act is and why this compromise matters. For months, the Senate had been stuck. Crypto firms and bank lobbyists were fighting over one key question: can stablecoin issuers offer yield to their users? The bank lobby wanted a complete ban on all yield. They argued that any interest on stablecoins makes them too similar to bank deposits, which would threaten the traditional banking system. Crypto firms argued that activity-based rewards, like staking rewards, trading fee rebates, or loyalty points, are fundamentally different from passive interest on reserves. After months of negotiations, Senators Tom Tillis and Angela Also-Brooks released a compromise text on Friday. Here are the key terms. Here is exactly what the compromise says. First, stablecoin issuers cannot offer yield based purely on holding reserves. No passive interest just for holding a stablecoin. Second, stablecoin issuers can offer activity-based rewards tied to real participation on their platforms. Staking, trading, lending, those are allowed. Third, the Treasury Department and the CFTC get 1 year after the bill becomes law to write the detailed rules. So who won? Crypto won. The bank lobby wanted to ban everything. They didn't get what they wanted. Coinbase Chief Legal Officer Paul Grewal said, and I quote, "The language preserves activity-based rewards tied to real participation on crypto platforms and networks, which is what the bank lobby said they wanted." In plain English, the banks claimed they only wanted to stop passive interest. The compromise gave them exactly that, nothing more. This is a major legislative victory for the crypto industry. Now let me show you how the market reacted. Going into Friday, Bitcoin was under pressure. Oil prices were high, Iran tensions were escalating, and Bitcoin had dropped to around $75,500. Then the Clarity Act news broke. Bitcoin immediately recovered. By Friday evening, it was back above 77,000. By Saturday morning, it had climbed past 78,000. But here is the important thing: the Clarity Act wasn't the only good news. At the same time, Tehran relayed a new ceasefire proposal to Washington through Pakistani mediators. Oil prices dropped nearly 3% to around $102 per barrel. So Bitcoin got a double boost: a positive regulatory news and easing geopolitical tensions. The S&P 500 also reacted, closing at an all-time high, its fifth straight weekly gain. Everything is moving in the same direction for the first time in weeks. Now here is what the headlines won't tell you. Before the Clarity Act news even broke, the institutional story was already bullish. Bitcoin is up 15% over the past 30 days. That's a fact. April ETF net inflows came in at approximately up from $1.3 billion in March. Total spot Bitcoin ETF assets have now crossed $100 billion. And corporate buying has been massive. Strategy, formerly MicroStrategy, bought 56,235 Bitcoin in April. Metaplanet bought 5,075 Bitcoin. Here is the key insight: corporate Bitcoin purchases over the past 30 days have exceeded the equivalent of Bitcoin mining output for the next 5 months. Think about that. The amount of Bitcoin being bought by corporations in 1 month is more than miners will produce in the next 5 months. That significantly reduces potential selling pressure. But here is where the story gets interesting. Despite Bitcoin's strong recovery, the derivatives market remains skeptical. Let me give you the numbers. The probability of Bitcoin hitting $84,000 by May 29th, only 25%, according to options pricing. A call option at the 84,000 strike price for May 29 th costs about 1,063. And here is the key tell. Put options have been trading at a premium for the past month. That means derivatives traders are demanding more money to sell puts, bets on price drops, than to buy calls, bets on price rises. That is increased demand for downside protection. Professional traders are not convinced the rally has legs. But and this is important, the analyst notes that weak demand for bullish derivatives exposure does not negate the probability of Bitcoin rising. As long as institutional buying remains robust, the bullish momentum can continue even if retail traders on derivatives exchanges are skeptical. This is a classic situation where the spot market, real Bitcoin being bought by institutions, is diverging from the derivatives market, leveraged bets by retail. So here is my final takeaway. The Senate just delivered a historic regulatory breakthrough. The bank lobby wanted to ban all crypto rewards. They lost. Crypto won. Bitcoin bounced from 75,500 to 78,000. The S&P 500 hit an all-time high. Oil dropped on Iran's ceasefire hopes. Institutions are buying massive amounts of Bitcoin. Corporate purchases in April alone exceeded 5 months of mining output. But derivatives traders remain skeptical. The options market gives Bitcoin only a 25% chance of hitting $84,000 by the end of May. 3 numbers to remember. 80,000 fuel, 75,500 the support, $84,000 the target if we break through. The Clarity Act markup is coming in the next few weeks. That's the next catalyst to watch. What do you think? Will Bitcoin finally break $80,000 this week? Or is the options market right to be skeptical? Let me know in the comments below. If you found this video helpful, please hit that like button, subscribe to the channel, and share this with someone who needs to hear it. I'll see you in the next video. Trade safe. Bye.